All right, good morning everyone, Richard here and welcome to the Monday edition of the Ninjacators Morning Bell. All right, just a quick look at the economic calendar today before we proceed to the live charts. Not much happening on for the US today, that is. Looking tomorrow, Empire State Manufacturing Index, PPI core PPI numbers. Retail sales on Wednesday. Looks pretty quiet for the remainder of the week. This after obviously last week's inflation CPI data came in, showed a slight decrease, although inflation levels are pretty bad still. Obviously markets reacted and shot to the sky. Now something I want to do differently here today. You probably noticed that I showed you that white chart previously on the gold. I've done one for the ES. I still need to do one for NQ and crude oil as well. So as always, we look at the ES, NQ, crude oil and gold with market geometry as well as the dollar index if we do have time. So that being said, we quickly switch to the white chart of the ES. And the reason why I want to show you these things is just to clear up all that clutter on a chart, if that makes sense. Just give you a bit of an overall picture of what it is that I'm looking at and potentially expecting for the various markets. And we're going to look at gold obviously later again, but set to the weekly offers a nice bigger picture of what it is I'm looking at, as well as some of the basic market geometry that I've drawn on the chart, as well as the potential pattern that I'm looking at, whether it's corrective, potentially trending, or wherever the case might be. In this case, I still think that the S&P 500, and similarly on the NQ, potentially busy with this B wave bound, or the second B wave of a double zigzag. ABC, WX, ABC. So it's basically two zigzags conjoined by WX axis and all things labeled WXY. So in the bigger picture of things, looking at this pattern over here, I think, like I've said, we potentially, not probably, we'll never know for sure, that this bounce we're seeing is potentially that B wave of the secondary zigzag, if that makes sense. So A, B, C, W, X, A, potentially a B that we're seeing now, relief rally. Everyone gets caught off guard. Similar to, if you look at it weekly, obviously, you have the strong moves up and all of a sudden you get a change in direction. So that's still what I'm saying. I've been saying this for probably 3 months now, that I think this is what's happening. If you also look at this recent low here, and I've only done this after the fact, but very interestingly, if you run a ray parallel to this pitchfork that we've used previously, I mean, this is the one that I've been using since we started sessions. We've had support at the center median line, resistance at an upper 50 dash there. We had support previously twice at those lines. Then we had a failure to the downside. Now, quite often, if you see price move below or above, depending on what direction you're looking at, center median line or whatever median line might look at, typically happens the same measured moves as previous areas where price moved up or below one of these market geometry lines. In this case, if you look at this little higher high here and these higher lows over here, draw a line there, it's exactly where you had a measured move below that center median line. Well, it's cool to see the market geometry at work, but in any case, in the bigger picture, I hope you get a better understanding of what it is I'm looking at. Again, I'll have to do this on the NQ and crude oil as well. Gold we'll obviously look at a little bit later. So, assuming that this is just a bounce higher, then let's move to the chart with a black background, should I say, and look potentially where resistance might step in. All right. Sorry, before I look at that, just in the bigger picture here, I missed this. Just from a retracement perspective, this is why I'm still saying this is corrective and actual. Although it looks very nasty, looks very complicated, a lot of fear in the markets, with obviously price moving lower. This is obviously after an extended period where prices were just moving higher, everything was happy-go-lucky until it was not. We have not even seen a 50% retracement of this previous move to the upside. And like I said, a bigger picture overall, I'm still seeing this as corrective. This could have been potentially been a C wave when we just had a small ABC in here. But like I said, a little bit shallow for that last Y wave to be there, in my opinion. just by studying these patterns for a very long time, but you know, could be wrong. So assuming that we are dealing with a B wave, let's get back on track with what I wanted to say earlier on. Then potentially price still have upside potential towards 4,076, give or take, and all that is that resistance level, in my opinion, is this center median line of a shift pitchfork that we've also had in our chart that's been tracking this entire downward move to the downside. And you can also see how even this pitchfork acts as a support, resistance, 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 and resistance again, support again, sorry, especially at these extreme moves, which is this low red warning line, as we call it, just a line that runs parallel to either your lower and your upper median lines, and there's equidistance to from what your center median line to a lower or center to upper median line would be. Sorry guys, my throat's a bit dry today. So they quite often catch those extremities, and it's a beautiful case of where we had also confluence between that center median line of that long-term pitchfork and this low red warning line of this lower pitchfork, of this pitchfork sloping downward. So strong move up, strong move lower. We had an area there we're expecting a bounce to potentially occur, and that had to happen. Obviously, talking about past things here now. But we're looking at a potential resistance area, and this was last week. Price had no issue breaking above that. So quite often when you're working with market geometry, you call this like price zooms through one of your market geometry levels and then retests it. So price has been in a pretty tight range today. You can see a very small candle on most of the indices, on the NQ as well. So should we get a move lower, I think that the 3,937, let's call 3,935. So that's sort of an area there could potentially act as support. Let me just put a label on that. Where is that gone now? Here we go. Snap mode off. It's a very sort of tight area. Let's call it 3,920 to about 3,937.40 to the upside. Should we get some sort of move lower, I think that still could act as support. Basically resistance turning into support, but this time from an angular nature is what we look at market geometry. Now I'm still saying upside potential possible, just simply because price is hanging in mid-air between market geometry lines, and quite often price will get drawn towards, almost like a magnet towards these lines. So on the upper side, above today's current candle, probably around about 4,076 is where potential resistance might step in, and where potentially this B wave here might end. So I'm going to stick with this bigger plan, or bigger should I say, what I expect could be happening or still be underway, until such time that price would break above this level. And I think if that happens, I think that's a dead sure sort of indication that wherever price would be, you know, prior to that this entire potential correction already ended. Okay, so those are your support levels. That's your upper resistance levels there. Just some basic fib work from this previous high to this low over here. Oh gosh, let me get rid of that. Do that again, sorry guys. And you'll see that price hasn't reached the 61.8 just yet. Had a previous reaction also yet at 50%. So 61.8 lying slightly higher, but I would not be surprised if we see even a pop above that towards the 4,076 sort of area. So yeah, this could potentially be resistance, and that potential B wave, as I mentioned previously. All right, so we'll keep an eye on that. Obviously, update things as time passes. And have a look again at the ES on Wednesday. All right, let's proceed to the NQ. Guys, as always, if you've got any questions, let me know in the chat box there. I'll be more than happy to answer them for you. And we're also streaming live on YouTube. The recording is normally available a few minutes after the stream. So if you ever miss one of these sessions, you can go catch it up there on our YouTube channel, the Ninjacators YouTube channel. All right. NQ. Relative to the ES, NQ has not been as strong, although also a very, very strong move last week to the upside. We've had this resistance zone between what was 11,500-ish to 11,700-ish. This little red area here, over here, that acted as support, or sorry, resistance once, twice, 3 times, and Friday broke above and closed above it. So, should price move lower, it might find support at this purple line here, which is a long-term median line, similar to what we did on the ES, around 11,718, which might act as support this time around. All right, potential resistance now potentially turning into support. Now on the upside potential on NQ, also think that price could still move higher and potentially may get into that sort of area over there. And basically the lower end is just a market geometry line above today's current price or sorry, say range 11,930-ish, give or take. Then we have also a downward sloping upper 50% dash median line, which is a similar pitchfork, also a shift that we use to track this decline to the downside. But whereas the ES found support twice at these low red warning lines, the NQ only did it once. Doesn't have to always obviously do it twice. Doesn't even have to do it once. I'm just saying that it missed it over here. So I still see downside potential on the NQ similar to the ES. But should the NQ move higher, then like I said, potentially into 11,930. And if price were to move above that, we'll then have to up that LLA stage and look at the other market geometry lines above there. So sort of the upper end or limit of this potential resistance zone be about 12,024. Let's call it 12,025. All right, so also assuming in the bigger picture, although I'll get that nice white chart with the bigger picture also clearly drawn for you probably by Wednesday. In the bigger picture, also viewing this current incline as potentially a bear market rally, i.e. a relief rally. All right, crude oil. All right. I'm sorry I don't have the white chart on crude oil because this one looks extremely busy, but I'll clear things up for you by Wednesday. In any case, just a quick recap. This move to the downside here we've seen as a 5-wave sequence prior to price reaching an actual area where the confluence between a lower channel line, which is this blue line switching to the upside, and a lower median line of a pitchfork, again a shift pitchfork, using the 3 most prominent anchor points prior to this decline. And where they all crossed is where crude oil moved into, and now we did this prior before price reached there, expecting that support might step in. We've seen support step in. Strong move back to the upside. Price moved right back into a center channel line. Again, these lines were drawn quite a while back in the past. So, you know, I always get asked, you know, it's easy to draw these things after the fact, but the fact of the matter is, in fact, that a lot of these lines on our chart for very long periods of time, especially if you're using daily and weekly time frames, some of these market geometry lines, if you're using anchor points or pivot points that extend quite far back in time, then these lines will for a very long time act as support and resistance. So it's all about formulating a trading plan according to where price is in relation to these lines. And sometimes, yeah, it might look like there's a lot of lines on the chart, but we're just pretty much looking at price patterns, like I mentioned before, as well as where price, like I said, is in relation to these lines. So we had a drop lower, we had a little support area that were identified that we might see support step in, and price did react higher from there, expecting that we'll see a break of these highs on the 10th of October. That being said, I did expect price to move actually a little bit higher into potentially the 94 to 97.50 sort of area. That did not happen. So not necessarily a must. This could potentially have been just an A, a B, and a C. And with price now potentially getting ready to move much lower. All right. So we had a move lower last week. We had a little area of support here. Basically, this is low median line of this pitchfork tracking this movement to the upside. Found support, moved higher, and now it's struggling to break through this lower dashed line over here, which is just a median line as well. So I'm a bit on the sidelines here with crude oil. This move to the upside was not beautifully symmetrical in relation to this move to the upside, i.e. in the same sort of range. Quite often, if you're dealing with an ABC, you'll have your C wave that travels the same distance as your A wave. Not always, but majority of time, or at least a small extension of that. And what I mean by that, if we measure the length of the A wave projected from the B wave to the upside, price, oh, I shouldn't have done that. Crude oil hasn't even reached nearly close to the 100%. So this makes me think, if price continues trading sideways here, or let's say it goes higher but fails to break these highs, or gets close to these highs and move lower again, that we in fact potentially dealing with, I won't say in fact, is again a wrong word to use, perhaps some sort of an ascending triangle. And then we get that move higher, and then we get a much larger move to the downside. And the only reason why I'm thinking in the future that we could get another move to the downside was this 5-wave sequence that we had lower that was potentially leading, or the initial build up, should I say, to a potentially larger move to the downside at a later stage. All right, let's quickly talk support and resistance here. If price moves lower again, potential support at this low median line, this one sloping to the upside or potentially lower. But if we see a break of the 84.70 level, which was this low was set last week on the 10th, and we see it with a decent momentum, then I'm going to assume that this was the end of a corrective move and that we could potentially see a much larger decline. All right, need some support around about 85.60, let's call it 85 or even 86, and potential upside resistance potentially just where it is right now, although it's been fluctuating above and below this dashed median line. But that centi-median line again there that we've been looking at for a while prior to price breaking out acted as resistance, support, or resistance turned support, and then it just couldn't hold and then price broke down. So to the upside there, potentially again around about 92 could be resistance should crude oil move higher again. Okay, gold. And now I have to bring back that bigger chart, or the bigger picture view charts, should I say. I've been saying for a very long time that gold's pattern potentially traced out, or potentially already ended, or might still need to make another move lower. A, B, C, I expanded flat. We have 3 waves in an A, 3 waves in a B, and then 5 waves in a C, where your C wave typically extends a decent amount, or should I say distance, below your A wave, in this case in a bearish scenario, right? Obviously inverse for a bullish scenario. So combination, potentially double zigzag for an A. The B wave being an ABC itself, where the A was there, a B wave of a triangle, just to confuse the hell out of everyone. Now they move up, everyone thought gold's going to go to the sky. Obviously no one would have predicted this, but anyway, failed to break this all-time high and a strong decline to the downside. Very, very typical of an expanded flat. Then expecting that we'll see 5 waves to the downside. Now we did see price tick this lower median line of another shift pitchfork, again used to track potential corrections. It's my favorite go-to pitchfork to use. We had a 5-wave sequence, 1, 2, 3, 4, 5 into this low at the week ending 22nd July. Price moved higher, and I did say though that this for a C wave was a little bit too low for my liking. I'd like to see price extend further lower below the end of the A wave. Although technically speaking that could have been the end of it. Obviously wasn't. Price moved lower again, which made me think that potentially this wave over here, maybe that's easier to show you. That last wave of the C wave potentially tracing out as an ending diagonal. 1, 2, 3, 4, 5. Now, difficult to say if that was the end of it. I was saying that if we do get a break above this upper trend line sloping downwards of the shape of this ending diagonal, that it potentially could point to the end of this entire correction. Now that did happen. Also note that price tested the 61.8 retracement from this low week ending 17 August, when was this, 2018, to the high, obviously, week ending 7th August 2020. Tested it once, twice, 3 times, and boom, strong reaction to the upside. That's obviously now just technical speak here, right? Technical jargon. Obviously a lot of things coinciding with economic news and inflation obviously being our topic this entire year, etc., etc. So as traders obviously want to know where price could move towards and potentially find resistance on the way up. Again, I still think that for as long as gold stays below this high that was set on the 10th of August this year, and let me just find that exact number there. This is obviously on the December contract. Put the snap mode on back. $1,824.60. Price breaks above there. I'll consider that this was the end of a corrective move. A massive corrective move, albeit a very confusing one for sure. But we also have upside resistance before price would even get there, around about 1787.40, 1799. Let's call it 1800 to the upside, which is basically just a dashed median line of this much larger pitchfork that I've shown you previously. Should we see a move lower? We might see just typical trading 101 technical analysis, a retest of this previous lower high here at around 1738 or spot 70. So support in the downside here, but I still think that gold could at least make it to this sort of area to the upside. Again, 1787 to about 1800 to the upside, and then it's really important to see what happens here. But again, price would initially or eventually, even if it finds resistance here, let me try that again. Even if it finds resistance here and moves higher and it breaks above there, and it breaks above this, then I'll consider this previous low here was potentially the end of this massive decline in gold. Right, lastly, let's quickly look at the dollar index, and then that would conclude today's session. You see these blue lines very similar to those I have on crude oil, obviously a different market, but they were drawn using anchor points prior to, when was this? 2017, and you can see how price continues to respect these angles beautifully. Broke above these angles, obviously extremely strong rally since the beginning of 2021, and it found resistance at an upper channel line. Now, if you notice, there's a channel that I've drawn to the bottom side here, and all I did was project that same channel to the upside, and price found resistance within the zone that we identified beforehand, lower end right 114.46. We had an upper limit around 116, which has not obviously been reached yet, but we're expecting a move lower. But obviously now with the first signs of inflation potentially cooling, the dollar index caught a break, moved lower, and I was saying that this is confluence area towards the downside in the shape of a center median line of a pitchfork tracking this move to the upside and an upper channel line where they're all crossing each other, giving us a potential support zone between 106.54 and 107.53. All, again, guys, just give or take. Now, yes, last week's move, one hell of a strong move, obviously down to the downside. It is not uncommon to see price, penetrate one of these lines and then make a move back up again. So I could still consider this as a support zone. Really now just depend on what happens this week. Another strong decline lower, and then I would say that was potentially the end of the dollar index move higher for this entire year. All right, so that concludes today's session, guys. Again, if there's any questions, I do have a question here. Is it find the algo? Good morning. Is it just me or is the volume low? I have all my settings on max here, so I do apologize if you can't hear me properly. Maybe I can change my output slightly higher. But guys, if there's anyone else having any issues, then please let me know there. But find the algo 8, I'll definitely have another look at my settings here. But it's quite, yeah, it's at the optimal level. So I'm even looking at the screen capture software, and we all set at max levels here. So hopefully it's just a temporary issue. All right. Okay, guys, if no more questions, then I'll be ending the session today, and I'll be back again on Wednesday and on Friday as always, same time. And again, if you miss any of the sessions, you can go catch it on our Ninjacators YouTube channel and go review the markets I follow over there. Cool. Thanks very much for watching, everyone. Have a fantastic rest of your day, and I'll see you again on Wednesday. Until next time, take care.